And joining us with his analysis of trade at midday is Viv Govender from Rand Swiss Offshore. Viv, thank you so much for your time today. I'm struggling to make sense of market action. Markets positive in sentiment, but sentiment seems, or rather markets positive in Asia, but sentiment seems a bit mixed over in Europe. US futures are in the red. We also have a mixed picture here at home. What's going on? Is the level of volatility still there? Markets or investors still sort of spooked by what we saw over the past few days?
I think to a certain extent, maybe. But I mean, we are seeing, for instance, on the local side, a lot of it being driven by, the gold fields, the Harmonies, the implants. So we are still seeing the precious metal producers, driving things there. And that's, I think, one of the reasons you see the market, looking a bit positive here. In Asia, I believe it was the Japanese, holding interest rates. And that, I think, helped to boost the markets a little bit. As for the US, it's been a bit of a rocky ride this week. We had the scare around Greenland, and we had the relief rally thereafter when there was a pullback. We've had some interesting economic numbers from the US, especially on GDP, which came in incredibly strong. 4+% GDP growth in the US. If you think about it, the size of the economy, how wealthy the people are, 4+% growth is a pretty impressive number. And that obviously would indicate that, interest rates are not going to be as low as some people had hoped for. And that's obviously negative for the market. That might be driving things lower, but there.
And sticking with, the Fed and expectations come next week, we also got PCE figures coming in at 2.8%, in line with expectations. But there were concerns that that figure is edging away from the Fed's 2% target. CPI came in at those levels as well about a week earlier. Taking those prints into account and the current state of the economy, the current state of the labor market, you're expecting a hold?
Yeah, look, I mean, I think not more than just that. Also, the Fed is manned by human beings, and what Donald Trump is doing right now with the Fed, if you had to have if you had to say any situation, the 50-50 situation, the Fed is going to probably go towards hold or not cutting, then being a bit more lenient or dovish, just because I think to reinforce their independence, reinforce that they are still looking at monetary policy as opposed to to this buying political pressure. So, yeah, I think in the current situation, given the incredibly high growth rate, the fact inflation still remains a bit high, I think the Fed is going to be a bit more cautious, going forward, as well as the possible perception that it might be, bowing to Donald Trump's pressure, might be more cautious going forward than it otherwise would have been.
Earnings season is also picking up pace, and one that was watched yesterday is Intel's fourth quarter numbers. It seems like the performance was welcome, but guidance for the next year, this year in particular, fell short of expectations. Did markets just overestimate that turnaround?
Yeah, look, I mean, the turnaround that's coming through, I don't think it's built on what really has happened. It's what's going to be happening going forward. I mean, one of the big, improvements we saw was after the U.S. government basically took that share of the company and was going to effectively, making it a national champion. And so we just see, Intel turn around. Intel has come down still significantly. I mean, over the last 5 years, from the peak in the last 5 years, it's still down quite significantly. And so even though we have seen a recovery come through, this is a share price that is, got a while to go to get back to, highs that it saw just a few years ago. That being said, my only issue with regards to Intel is, yes, we have seen some positivity return with regards to, this government intervention, etc. But does it really change the fact that NVIDIA and TSMC and ASML, etc., are still, significantly ahead in terms of manufacturing capacity, design, as well as machines, etc. And Intel, though it is taking a bit of a turnaround, it's a $250 billion company where you're looking at some of its competitors are, in the multiple trillions at the moment.
Is Intel perhaps just too big to fail with, the government backing it's been receiving?
It is too big to fail. The US can't afford for it to happen. I mean, if tomorrow something happened and TSMC disappeared from the wall, Intel would be by far the US's best option when it comes to chips, in terms of manufacturing, etc. And so it obviously is very important strategically for the US. Whether or not that translates into better profitability, and translates into higher stock prices is unknown at the moment.
All right, let's bring it back home. Mr. Price pushing ahead with the NKD acquisition despite investor pushback. The retailer saying it's awaiting approval from the EU. Let's just get your take on that acquisition and the response we've been getting in terms of investors pushing back, that share price movement as well.
Yeah, look, I mean, the 10 billion or so that they're looking to do to get NKD. I think the issue here is a couple of. Firstly, the question is whether or not this is a big enough deal that, along with other stuff that they've done, to justify, a shareholder vote as opposed to a management decision. And the second thing is that, the history of South African retailers internationally has not been that great. So for whatever reason, our local companies have been a bit aggressive in terms of how they've been expanding internationally, especially in the developed world. Australia, Europe, etc. It just does not work out well for us or for our retailers. And so I think that is one of the reasons that we are seeing this kind of pushback coming through. Whether or not this, will fail in court is unknown at the moment. But I do think that, there is valid reasons as to why shareholders are concerned about the deal.
I'd like to also get your take on the Rand strength we've been seeing. I mean, over the past 2 days or so, it's been broad-based. So we can't just say it's, on the back of a weaker dollar. Are we just seeing the strength on the back of perhaps the rotation into emerging markets?
Also, remember, we do produce a lot of the things that are doing really well at the moment. The platinum prices are high, gold prices are high. We export a lot of that stuff, and therefore our export values are looking a bit better as well. I mean, we've just broke through the 19 to the European 19 rands to the euro level. Obviously, we know the currency guys you mentioned. We are seeing the dollar rand looking, very strong as well. And even if you look at the pound rand as well, I mean, we also at pretty strong levels, just below 22. I do think a lot of the stuff is due to the fact that our export mix is looking really positive at the moment. And and also positivity coming through for things like, for instance, what we're doing with regards to inflation targeting, and just somebody mentioned it yesterday. I thought it was quite interesting that we are pretty much the only central bank in the world, or one of the few central banks in the world, that still seems to be doing their job properly. We're not being too buffeted about by political pressure. If inflation is low, we'll cut interest rates. If it goes up, we raise them. We live up to our targets. We are conservative. That's not as common as it used to be in the world.
All right, let's hit pause on the conversation. Before we move on to your stock pick, let's take a moment to touch on which counters your industry peers are watching closely.
The JSE is extremely cheap. It trades on about an 8% dividend yield, 11 PE. The historical PE is on average about 13 and a half times. But the thing that drives the JSE is trading volumes. And if you go back 18 months, the JSE was trading about 20 billion a day. Today, the JSE traded 43 billion. And again, I think as Grant earlier alluded to, we're seeing foreign investors becoming more active in emerging markets, and South Africa is part of the emerging market complex. And so the thing that's going to drive JSE volumes and hence profitability is going to be trading activity. And I think this is going to be a good year for emerging markets.
My pick is Old Mutual. It's really a catch-up trade. The other insurers have outperformed. For many years, Old Mutual has struggled, I think, a little bit for leadership and guidance. And they've got Yuri Stradum there. There's a clear plan. They've still got a very strong brand in the niches in which they operate. It's trading really cheap, 8 times next year's earnings. Good dividend yield. But it's been a story where they've struggled to turn the ship around. It's been this big beast with all this potential for many years. I think we're seeing signs of a good CEO making a difference.
All right, Old Mutual and the JSE. Viv, your analysis on those counters?
Look, I mean, we had the best performing stock market, or one of the best performing stock markets in the world last year. I think that we're third or fourth in the world in dollar adjusted terms. I do think that there is obviously cheapness in that market at the moment, especially the JSE. That being said, there are longer-term issues. We haven't had the listings we should be having. We haven't seen, we have more delistings of significant companies than listings of companies that have been of a reasonable size coming through. With Old Mutual as well, I mean, obviously, again, we're talking about a good P ratio, a good, it was a P ratio of about 10, a dividend yield almost to 6. That is a pretty good company. I mean, And it also is benefiting from the fact that you get, South Africa-based and with a very well-performing South African market as well, helping it out. So yes, short-term probably some value there. Longer-term, I am concerned about some of the issues that might be affecting these companies.
And what about Old Mutual?
Yeah, same exactly.
Same.
Short term,
All right.
I think in terms of like the longer term issues with like the growth of the country, obviously the insurance business, etc., depends a lot on that.
Okay, let's get your stock pick then. Where are you seeing value at the moment?
Okay, I'm still looking at the AI sector, and there's a nice little ETF out there that I think that people might be interested in. It's a company called SOX. It's the iShares Semiconductor ETF. And if you look at the last year, so this thing has done about 50% over the last year. It is a way to basically enter investing in the AI sector if you don't know too much about it, or you basically don't have the kind of size to get a nice diversified portfolio. So it's SOXX, it's a semiconductor ETF, a great way to get exposure to the AI boom.
All right, let's leave it there. Viv, thank you so much for your time and taking us through trade at midday. Now that was Viv Govender from Rand Swiss Offshore.